Larry Hatheway is in London. He's chief economist at GAM Investments. So, Larry, thank you so much for being with us. Appreciate that. So, in terms of what's moving the markets today, guys, can we pull up the big board? Dow has been pretty much up triple digits all day. On the one hand, you've got the avoidance of a potential government shutdown. On the other hand, you've got this trade deal looming with China. Which one of those factors do you think is moving the markets the most today?
Well, I think it's both of them, but if I had to choose, it's probably the trade deal. It's not because we're any more certain that we'll get one done, but it has cast a shadow not just over U.S.-China bilateral relationships, but over the entire global growth story for 12 months now. If we can find a deal and either hold tariffs where they are, or even better, perhaps roll back the tariffs that were introduced last year, I think that that will be very important, not just for capital markets, but actually for growth conditions, particularly in places like Europe or in emerging markets that have been hard hit by fears of this trade conflict.
So, I mean, if a trade deal doesn't get done, if there's more uncertainty, especially because, China is in such a difficult position, just in terms of Xi Jinping trying to save face with what's happening with Hatheway and the US's stance on that. If a trade deal is sort of postponed or kicked down the road, what then happens to markets?
Well, postponement doesn't help very much. We've already seen markets respond very favorably in the course of this year to things like the Fed taking interest rate hikes off the table, to fears of recession in the U.S. that proved to be unfounded, and now to this as well. We've advanced a long way in equity markets. I think it is time now for actually concrete steps to emerge that will suggest that some of these bigger risks are actually receding. So postponement probably doesn't help us now at this point in time. It's really about finding resolution.
So aside from what's happening with the U.S. government shutdown and the good news on that front, and also this potential, this willingness, I would say, from Donald Trump to negotiate a bit more with China, what else, aside from those two factors, what else does the market really have to be concerned about over the next few months? What's next on the horizon?
Well, I think we have to see that signs are improving of growth outside of the U.S. The U.S. story is still pretty intact. We've seen strong jobs growth, final demand, and some recovery of leading indicators. But in Europe and China in particular is where the weakness is most profound. So people really want to see China continuing to take steps to stabilize its economy, somewhat through credit easing, maybe through some infrastructure spending. And in Europe, they really want to see some stability return so that those sectors that have been hard hit in the last year, for example, autos or in shipping, can now begin to recover, and we can see a recovery of the Eurozone growth story. So I think the markets are looking for stability in the political and policy arena to allow the adjustments to take place and to get back into a world that is more synchronized in terms of growth.
And just specifically talking about the U.S., when a deal, I mean, obviously it's going to the president's desk in terms of this deal with Congress, when it is eventually signed, I mean, is the sort of good news already built in to markets right now? Or when the deal does get signed, can you see markets moving even higher?
I think there'll probably be some further gains for markets. To be honest with you, I think it's also about looking at bond markets where yields are very low these days. And if the world is improving, and if we get that improvement in the equity market feeding through into corporate optimism, then how long can the bond market ignore the possibility that the Federal Reserve will have to come back and revisit whether it needs to raise interest rates? So I think the market, that is the equity market, can advance, but we also have to be ready for the idea that bond yields could begin to resume their rise.
All right, Larry Hatheway, thank you so much. Appreciate that. Good to see you.